Hello and welcome to Karner Blue Capital's inaugural Lunch and Learn presentation on biodiversity in investing. My name is Sandra Powers Murphy, CEO of Noble Ark Ventures and the author of The Road to AUM. Some quick housekeeping for our webinar today. This webinar will be recorded. We also certainly encourage you to enter your questions into chat and we'll do our best to get to them. At the end of the session, we will also provide contact information for Karner Blue Capital and for Vicki Benjamin, should you want to follow up directly. So today we will be speaking with Vicki Benjamin, the co-founder and president of Karner Blue Capital. Prior to founding Karner Blue Capital, Vicki served as the CFO and later president of Calvert Investments. And beforehand, she was a partner at KPMG. So before we begin, Vicki, that is certainly an interesting shift from partner at a Big Four accounting firm to president of Calvert, which we all know, and now founder of Karner Blue Capital with a focus on biodiversity. Can you tell us a little bit about that journey?
Absolutely. Good afternoon, everyone. I had a great work experience for 10 years. I was a partner at KPMG in the investment management space. Really learned a lot, loved my job, loved the people there, and I assume some are on viewing this now. But when I was approaching my 50s, I realized I wanted to do something just a little bit different. And I was lucky enough to see the CFO role for Calvert Investments pop up. And Calvert was a great place to work. It was arguably the largest and oldest and the founder of socially responsible investing. And so I started there early in 2015 as a CFO, subsequently became the COO, and then the president upon the sale of its assets to Eaton Vance, where I was responsible with my co-founder of Karner Blue Capital and the general counsel of Calvert, Andrew Niebler, to liquidate Calvert. And it was at that point in time that we looked around and saw that there was no products devoted to biodiversity, really focused on environmental stewardship or animal welfare, and the concept of Karner Blue was born.
So you are, there's no question, a pioneer in biodiversity conservation in this space. And in fact, your firm was built to provide the first registered fund investment, the Karner Blue Biodiversity Impact Fund, and a series of SMA strategies dedicated to biodiversity, animal welfare, and environmental protection. Can you define biodiversity conservation for us in a bit more detail and tell us why it matters?
Absolutely. Biodiversity represents all the plants, animals, human beings, and the ecosystems that they exist in. Biodiversity provides all our food, our clothing, our shelter, and is responsible for much of our medicines. Biodiversity is foundational to the sustainability of the planet and humans, and all the life on it. Biodiversity is remarkable in the fact that it sustains itself, it cleans the water and protects the soil, stabilizes climate change through absorption of carbon, breaks down pollution and waste, and also ensures species survival through genetic diversification. But I think everyone on the webinar will agree, the most valuable contribution is its limitless beauty and our ability to walk outside or to go on a tour and see beautiful flowers and animals.
So certainly we can agree biodiversity conservation is real and it's critical and it's something that investors can impact. But what are the investment risks you perceive in biodiversity conservation that other investors might be missing?
Much like climate change, Sandra, folks have been slow to react. Climate change has been arguably around for more than 20 years. And yet, in the U.S. SIF report that was just issued in 2020, this is the first time that climate change has become a real impact investor focus. Much like that, biodiversity has run side by side with climate change. And most of it, just like climate change, is a result of human activity. Habitat destruction and deforestation, pollution, climate change, invasive species introduction into natural environments, and the exploitation of animals has resulted in a wholesale extinction crisis. The UN estimates that in the next couple of years, 1 million species will go extinct, and 25% of the 8 million species last counted are endangered. This immense threat of loss is transformative and requires our immediate notice. Yet it still remains unrecognized, mostly in the investment universe. So what I mentioned to you earlier was when Andrew and I first started early in 2017, fresh from Calvert and understanding and very deeply mired in socially responsible investment philosophies and principles, we looked around and said, why is it that these products seem to be missing from the marketplace? I called up a very good friend of mine who was a data miner on ESG data sets. And I said, can you tell me what you see out there for biodiversity or animal welfare, environmental stewardship indicators that are being produced from companies that they're collating and putting into ESG data sets? And he called me back, he said, Vicki, hardly anything, mostly about animal testing. So I could go down the rabbit hole, and I'm going to stay away from that. But he said that is exactly about what it is, a little bit of high-level biodiversity indicators. So knowing what I did, I realized that the rules and regulations didn't require companies to disclose many of their impacts. There was no taxonomy to disclose their impacts. I mean, Regulation SX, SK from the SEC dictates a lot of the required disclosures for publicly held companies, especially related to GHG emissions and other climate change risks, but nothing about biodiversity. So that lack of information made it hard for data providers to package data and for investors to have transparency into these risks and opportunities that biodiversity loss presents.
So when you think about the opportunities in a little bit more detail, what do you see for investors in terms of biodiversity conservation? We've talked about the risk, but obviously we want to talk about the upside of us all working together. What are the opportunities?
Well, I'm just gonna back up just for 1 minute and talk a little bit more about the risks, because I think it's important to more fully explore that. So there are many industries, and I can think of a couple just briefly: agriculture, pharmaceuticals, and tourism that are directly dependent on biodiversity. So for instance, agriculture, 75% of crops are pollinated by animals. Of that, 50% are pollinated by bees. It is no surprise to anyone that's watching this that we are suffering a great endangerment of the bee population. And especially since 1990, 40% of insects have disappeared. Agriculture also has a big dependency on land. 1/3 of our terrestrial land is devoted to crop and animal agriculture, and 25% of the globe is devoted to animal agriculture alone. Pharma, 4 billion people out of the 7.1 billion people on the planet rely on nature-based solutions for their pharmaceutical needs. And 75% of cancer treatments, Sandra, are related to biogenics. Tourism is another very biodiversity-dependent industry. And that, I mean, who would go? You can't really go on an African safari and not want to see lions, elephants, giraffes, which just recently reached the red endangered list. Those dependencies on biodiversity create a threat to production and sustainability of profitability for firms. Further exploring the risks regarding agriculture, which I think is really important, and I keep going back to agriculture because it's probably the biggest industry as far as impacts on biodiversity. But we all know that agriculture has huge environmental risks related to pollution, water usage, and lest we forget carbon emissions. 40% of carbon emissions come from the ag industry, much of that due to animals. These environmental issues put pressure on society and result in issues that trickle down as to social matters. So I spoke about the land use of agriculture. And again, I'm focusing on ag, but we can talk about the other industries. We look at land usage, and with the population bulging as it is from 7.1 billion to potentially 9.5 in 2050, where is that? If agriculture and food need continues to grow, where will that land come from? We're already seeing those conflicts between indigenous people. For instance, everyone's heard of the Amazon burning to make room for ranching for beef, and encroaching upon indigenous people who actually, and this was a fact I just found out recently, 25% of the planet is owned or managed by indigenous nations. That obviously is a tempest in a teapot. These social licensing issues relative to the land grab also relate to pollution. I think especially when you look at a society that is evolving and becoming more just, and you hear about where some of these CAFO, concentrated feeding operations for animals, are based, they're in most of our underserved communities. And and you can go, I've read countless stories of going down into the south areas, lower income areas, underserved areas, and you can smell the stench from the concentrated feeding operations of hogs or chickens and even beef and feedlots. This is an issue, a real issue, and causes significant reputational risk for the companies involved in these industries. And we haven't even talked about animal welfare. The UN came out with a study that 70% of people, even in the US, are concerned about the nature of their products and how they're produced. And people who here, anyone, you have a cat or a dog, even if you consider animals food, you're concerned about the treatment of those animals while on this earth. So we have social issues related to biodiversity and animal treatment. But by I think the most significant for this industry, this one, is what's going to happen with this exciting new change in the administration and a further rollout of environmental protection legislation and perhaps even tax regimes that will result in taxing of unfavorable impacts from industries that emit more than their share of carbon. Those are some of the risks. You then asked me, where do I see the opportunities? Whenever you deal with industries that are accounting resource depletion along with negative impacts that have growing social considerations, they have to innovate. They either innovate and change and develop new products, or they frankly disappear. We have to look at that in the agriculture industry. Again, following further down on this example, with resource depletion, and we talked about bees. Bees are very important to agriculture. And the world is innovating in crazy ways to make up for our lack of pollinators. There's now robot bees. It was written up in CNBC. Now that's kind of scary to me, the thought of having robot bees, but we need to pollinate our crops, and they're virtually irreplaceable. Bees are disappearing because of a couple of factors. We haven't been able to nail it down completely. GMO use, climate change, weird bee illnesses, but we also know that pesticides have a big role to play. So John Deere, who's recently been in we recently put in our portfolio, has come up with an innovative technique that they're rolling out that uses facial recognition to only spray pesticides on those plants it's designed for, eliminating the collateral damage and perhaps the bee colonies and other plants and insects that get in the way. That's what we're talking about for opportunities for resource depletion and replacement. When you look at impact mitigation, there's many opportunities there, and you can move along. We like to think about, if you have the beef industry with so many negative impacts, social license issues, regulatory concerns, you think, what could kind of ameliorate that? especially with the environmental problems of water and waste and GHG emissions, and you look at alternatives. The world is going to move to plant-based alternatives. We don't advocate, we don't think eating is binary, you're either this or you're that. But I believe, and we believe at Karner Blue Capital, people are going to have to move down the plant-based spectrum. And so we fully embrace the innovation of plant-based alternatives, lab-grown meat to the extent that it's safe. And we look at alternatives that can be used to expand the use of meat, like the Good Meat Company founded by Paul Shapiro from the Humane Society. It actually extends the amount of beef in a patty and puts in other materials in there that are good for you to make it easier to eat, less beef in the same form. And you say to yourself, how does an investment manager look at mitigating impacts? And we evaluate the ag industry, we look at palm oil, we look at beef, and we know that these are your large companies in these industries are not the ones directly producing these products. It's small farmers, many often close to the rainforests. So we rely on certification networks. The most important, of course, is RSPO, the Reliable Sustainability for Palm Oil. And you have to ensure these big agricultural companies are making sure that these supply chains are airtight as far as their sustainability practices. The same thing with the Sustainable Beef Council. So you need to make sure that you're evaluating your supply chain to minimize your impacts.
So I think you've created an amazing list of opportunities to differentiate the notion of simply do no harm from actually doing good, actually creating something of an industry leadership position. I know you'll talk about that in a bit. Karner Blue Capital has invested significantly in creating a framework for evaluating corporate impact on biodiversity. Can you talk a little bit about the factors that your team considers that may not be part of a general ESG fund's mandate?
This is a great question. I spent a lot of time this weekend preparing for this conversation and reading through US SIF's 2020 report. And I just want to back up a little bit about ESG in general. And recently it came out that of the 51.1 trillion of assets that are managed in the US, almost 1/3 are under an ESG mandate. So what was interesting is US SIF was trying to get details under that 16 billion. Under that umbrella, how are people actually incorporating ESG? Very few, 4 or 10% replied, and it was very opaque as to that. I think that I can differentiate Karner Blue by walking through in very much detail how we incorporate and integrate ESG into our business calculation and how we look to provide outperformance and market returns for our clients. Most ESG integrators will use restrictive screening. Founded back in the religious organizations of the 1700s under the Methodists, restrictive screening eliminates those companies in those industries that are considered to produce social or detrimental harm to society. That would include liquor, tobacco, firearms. In the case of Karner Blue Capital, we've eliminated any fur exposure because we believe there's alternatives to fur. We don't need to kill animals for fur, and coal. So those are taken off. Those industries are eliminated immediately. Restrictive screening has been used for centuries. We then say, okay, our issue, our focus, we want to use the capital markets to move forward the planet more sustainable and save biodiversity. So we only focus on those industries we consider high impact with biodiversity. We have 14 industries, a few, of course, agriculture, textiles, apparel, transportation, paper and forest, pharmaceuticals. We look at 14 industries and carve those. Those are the companies we're going to focus on. This is all part of our ESG process. We've taken now this Morningstar Developed Market Index is our universe. We've taken that down from 7,000 to about 2,000. And now we say, okay, we want to really integrate ESG. So we layer on our ESG data provided from Occam, who I think is, all of them are good. I love Occam. And we integrate Occam's ratings into that universe of high impact industries, exclusive of those restricted industries. And we say only those companies that perform at the mean level for their industries, because there's some industries that are better than others, of environmental, social, and overall governance scores are included for further consideration. We then move down the spectrum, which I believe is the next part. We've incorporated ESG, but now we're integrating ESG. So those remaining companies, those 50% that performed above the mean on overall corporate sustainability and responsibility, are now evaluated in the Karner Blue proprietary industry models with key performance indicators industry specific by industry analysts that know the issues and know the risks and know the opportunities. Those companies then, only those companies that score above the mean in our key performance indicator models. And this is extensive work that we've done on these. I just walked you through some of the issues that we've looked at, only ag, and we have 13 other industries. Only those then are kicked over, and this is what makes us different, to our fundamental financial team, where there's a technical analyst, a fundamental financial analyst, and others that review those outperformers, looking for those that are going to give our investors the best opportunity for financial returns. We use the mantra quality at a reasonable price and have very little exposure to growth, much more a value tint. And I think what makes us unique is we have very little exposure to the FANG stocks, and yet our returns are marketable. And you can check out all of that on our website. But that is what makes us different. And also, during the fundamental financial review process, these are Karner Blue employees. We are not outsourcing our investment management. These are people that are founded in the belief that we can do better for our investors and for everyone else by investing in those companies that are going to lead us to a more sustainable future. So they integrate top trends in biodiversity, opportunities, plant-based foods, electrical vehicles, looking forward to the future.
So I think Karner Blue is doing things quite differently, almost the opposite of how many of the more traditional ESG funds are factoring in those criteria. And I know you recently did a major thought leadership piece on metals and mining. That's very interesting, a different topic for many of us, and would love to hear a little bit more about that piece and why you did it.
Well, I think I pretty much exhausted ag, so it's nice to be able to talk about a different industry. I like to call it's poor metals and mining. So anecdotally, when we were first out talking about Karner Blue and our products, many people would come up and say, "Oh, I'm not going to invest in you. You invest in metals and mining." And I'm like, "Okay, but you have a phone, you drive a car, even if it's a Tesla, it relies on metals and mining. Your lithium battery, your cobalt in that battery relies on metals and mining." So until you can get away from metals, which there is really no alternative, and we'll walk down that, we'll pull that back, unpack that a bit. There really is no alternative to metals and mining. We might as well live with it and look at it and try to understand it a little bit better. And that's exactly what we did at Karner Blue Capital. We look at metals and mining, although it gets a lot of exposure, it doesn't really have a large geographic impact. Unlike forestry or agriculture, we are talking about 1% of terrestrial Earth is affected directly by metals and mining. That said, even though it's a small user of space, it has tremendous impacts on water and pollution. And again, most of the metals and mining are in very biodiverse, rich areas that are often under the control of indigenous nations. So you again have the social licensure issues of encroaching upon indigenous nations and those things. And one thing that folks don't understand, the logistics of metals and mining create other risks. So when someone goes in, a company goes in to excavate for a new mine, they have to set up an infrastructure, Sandra. That
Right.
infrastructure involves road building and house building. That in itself opens the doorway, and I think you've heard about this in Australia actually, opens the doorway for illegal logging and creates human-wildlife conflict that raises not only pandemic risk through zoological diseases, but also creates a bushmeat trade and facilitates a bushmeat trade. We actually look for metals and mining companies that have policies, and there are some out there, regarding pandemic risk and bushmeat trade. So there's a lot going on in the metals and mining industry that folks don't understand. And we wanted to issue a paper that explained that. And there are actually, much like all the industries that we look at, when we put them through our proprietary models, we see the outperformers. We see that there's actually our favorite company in our universe. We love them all. But one of our favorite is Fortescue Mining. And that's an Australian producer, iron and copper miner, that has superior biodiversity protection policies. Sandra, they actually go in before they excavate, do a species count when they leave. And they're so forward looking. They try to leave the place better than when they got there. They make me excited. And that's why I wanted to put a paper out there about metals and mining.
That's awesome. Well, we would certainly be remiss not to talk about renewable energy as well, given that it has become a global conversation. Obviously, renewable energy is important for the preservation of our planet. What is Karner Blue's perspective on how best to support renewable energy through investment?
We treat renewables is arguably our favorite industry. If anyone's going to bring us through climate change, it's going to be greater reliance on renewables. The industry's been around for a while and is now starting to really develop because I think it's getting a lot of attention. When I talked about our ESG incorporation and integration, I said that we took out half of the underperformers on ESG. We look at renewables as an industry. We do treat a little bit differently. We evaluate every single one of them. We think every single one of them could be included in the portfolio. That said, renewables also have some challenges, and there are some that perform better than others. Renewables use a lot of land. Solar panels, estimated, use 10 times more land than a fossil fuel plant or an extractive mine. So renewables take up space, and you have to look at where that space is. We favor technologies that are used on roofs rather than freestanding. Renewables use a lot of water. I didn't realize this, but for them to be effective and efficient, they need to be clean, those panels. So we're looking at companies that have technologies to minimize their water usage. And then, of course, there's their impacts on nature. And we look for those companies that are minimizing and doing things to minimize the direct contact and harm on nature, because the panels go over biodiverse areas, and then there's, of course, direct contact with panels. So we look at those companies. Our favorite company right now in the renewable energy space is First Solar, one of the largest producers of solar energy and one of the oldest. And what makes them stellar is their concern about biodiversity and also their leading technology. We are looking forward to renewables because we see a lot of growth and opportunity, especially due to the change in legislation. And we're hopeful that this change in legislation will support further evolution, even into an innovation into hydrogen technologies, better supportability of batteries, and will help guide us into a more sustainable future for everyone.
So I think that's fantastic, and it is something that we're excited to move into 2021 to start to see take hold, not only for the reasons of wanting to leave 2020 behind, But when you think about, from Karner Blue's perspective, this whole notion of really finding these leaders, not just checking a box in ESG, but really talking about who's making an impact and which industries are most relevant for biodiversity. Do you have a sense of why these leaders are leaders? Like, what is it that prompts one company to decide to just kind of do the bare minimum and another to really proactively try to make a difference in the space that they're in?
That's a really interesting question. I think it's societal pressure, and I think that you see some of the industries are very entrenched in business as usual. I look at our path at Karner Blue Capital, and how you have to really constantly evaluate what you're doing and how you can do it better. So I think there's some companies that rather deal with what they've got going, like in agriculture, for instance. There's a lot of companies that are doing business as usual and not recognizing that the plant-based eating and is moving down that spectrum, and they're not putting out as many alternatives. Honestly, we know we have a problem environmentally. We know we all have to eat a little more meat. It'd be great if companies would innovate to make that stuff taste better. And I'm just saying that. So we have, and now we see people have done that, right? Impossible Foods is great. They're going to come out with new products. There's new milk alternatives. And so I think it's a mindset of embracing and keeping track of who your audience is and who your consumer is. And those companies that we're in the middle of a transformation. We're in the middle of a transformation due to climate change. We're in the middle of a transformation due to social justice issues. I think there's everybody on this webinar, and then certainly in the room with me, recognizes no more business as usual. Things have to change, and we have to make this a better place to live for everyone.
Our time is almost up today. So can you let us know how best you'd like folks to be able to reach you and your team at Karner Blue Capital?
I'd love to speak to everybody. Anyone who's interested in saving biodiversity is a friend of mine. So you can reach me at Vicki.Benjamin at KarnerBlueCapital.com. A lot of folks know it. I would love it if they look up our website, KarnerBlueCapital.com, and check us out on Facebook and Twitter. Thanks, Sandra, for your time.
That's great. Vicki, we did get one more great question that I want to throw at you because I think it's really important, and it speaks to beyond the investing, the thought leadership and market impact. The question is, can you explain how you engage companies on stopping and reversing biodiversity loss?
That's a great question. So we've been, I'm going to give one topic. We've been working on many issues. We have a three-legged stool, as I said before. We invest in line with our values, we advocate for change, and then we also are putting out papers, industry-specific papers that help educate consumers and investors. Advocating for change is a long runway. So what we do is we evaluate all the companies in the industry on a certain issue. Let's talk about fossil fuels. Drilling in the Arctic is a pet peeve of ours. So we look at all of the companies that have licenses to drill in the Arctic and evaluate if any of them are drilling in the Arctic. And if they are, where in the Arctic? Because if they're drilling in ice, it's a different risk profile and much worse for the environment. And so we've actually been on the phone with Shell. Shell had a lot of licenses, and we wanted an explanation of whether they were going to drill in the Arctic or not. That's one issue. We're not just limited to, we talked to many companies about antibiotic use in farm animals, and we've advocated on that. We actually had 36 letters that went out on the use of gestation crates, battery cages, and species mutation of chickens. And we've partnered with very many organizations. We actually have a partnership right now with the Church of England on tailing dams in the metals and mining industry. So these are, for folks on the phone, for folks on the webinar that don't realize, it's not, you don't go from A to shareholder resolution. You have to engage with these companies. And back in the very beginning of the conversation, I said to you, a lot of these companies don't report this information. So our folks are on the phone with representatives, investor relations representatives, actually the head of research sometimes. I've been on the phone with them, pharmaceutical companies, to understand their policies surrounding biodiversity. And we try to inform their understanding. I actually talked to Walmart about cage-free eggs a couple of months ago, and we try to influence their understanding of what others in the marketplace are doing. And so you try to encourage better behavior by sharing what you know. And so it's a long runway. And then if everything goes awry and nothing changes, then you may resort to a shareholder resolution.
Vicki, why are more companies not doing this? I mean, it seems such an obvious, critical need to engage with these companies and to support them when they are moving in the right direction. Why do you think more investors and companies are not pushing for this and investing this way?
Because it hasn't had a direct impact on human beings, and not yet. So climate change. I mean, we're just now starting to react to climate change. And there's still people that don't believe climate change is happening. Whether or not you believe in climate change, you have to look at the unnaturalness of weather events over the recent couple of years. And you say to yourself, now folks are saying, okay, maybe we've got a problem here. And so climate change directly impacts human beings and impacts insurers and banks. Biodiversity loss is kind of subtle. It's quiet. I noticed, just in the last couple of years, how few insects, fireflies, are outside. I've said, wow, what's going on? And I read some papers by Jeremy Grantham and realized we have a problem here. It's a silent problem. And it's not really as noticeable to people or real to people as climate change. So it's just been on the back burner. And it's my job and Andrew's job and everyone at Karner Blue to make it your job to understand that that's out there and make our investors realize this is really important.
That's amazing. Vicki, thank you so much. Our time is up today, but this was an incredible overview of biodiversity and investing and what we can all be doing and what Karner Blue Capital is leading the charge on. So thank you so much for your time today.
Thank you. Thank you.
Have a great afternoon.